All right. So it's Friday, this particular highlight, and it's the middle of August, and it's slow. And you know that. Use your experience to know, keep your powder dry. It's just an interesting trade here or sequence. Those guys in the room seen it live, and it was, where was it? Way back here. 61s had a chance to go lower um, because we had a decent amount of shorts that puked and then a bunch of longs that came in. But it was strange because right there, a bunch of longs come in. Little Johnny's buying it. Little Johnny's are not long down here, right? They're not long down here, not long here, but then they get long here and they're wrong generally. And below 61, the market should get weak. And it did, but right there you had some shorts coming in long. So it really was like a back and forth, like, okay, all right. And then once, right, let me back it up right there. Right there, it's pretty bearish. What I see right there. That's pretty bearish. And then this happens. That short and long, they balance each other out at 61. So then it's like, man, you can't get above 61 again. You're short. You got to keep this thing. See, there's my cursor coming down, telling people that 61 is really the line in the sand. If you're short, you got to keep that SOB below there. You just have to. And fortunately, it stayed below there, but just an odd, kind of session, which we had that expectation going in. We knew it was going to be slow. The volume was light. The range was tight. It has been the last 2 days. That doesn't mean there's no opportunity. It means your frequency should be lower, the number of trades you take, and it should be a hit and run. You could review what you do and use that part of working, but don't think that you have to trade in order to be considered working. Or this is good. This isn't good screen time. It really isn't. It's like there's only so much you're only gonna get so much better by throwing the ball up and hitting it yourself. You need a little batting practice. You need a machine. You need some guys shagging the balls. You need to get out there. That's more quality practice. So don't think that the more screen time you have, the better you're going to get, because there is screen time that is a waste of time, especially with these market conditions. So that was the kind of the turn off the highs and a bit of the failure up there and what it looked like when it was up there. And this is what's important, is to have, even on slow days, to have the ability to do this, to see what you're missing at the highs and lows. And generally, but you got to have the right information. I was telling people before I did this highlight, price doesn't move unless there's an imbalance. Price doesn't go from there to there and throw in a high unless people are stuck long. And there's all kinds of long inventory up there. The holy SHIT moment. And the example I used was the mortgage meltdown, the housing crisis in 2007, 2008. Reason why housing did this was because you trapped a lot of people up there, because they gave everybody a loan that applied for it, and they jammed up. But you wouldn't have had markets and the price of houses move down that much unless you stuck people with a home, with 2 or 3 homes, and they couldn't afford it. They walked away from it. Banks couldn't sell it, and down they went. Less buyers, more sellers. Have a safe weekend.